Interest rate rises. It's on the lips of most of the news, media, and most property commentators at this point in time. In this video, I thought we needed to have a chat about 2023, about interest rate rises, and what does it look like for the everyday Australian. Now, for those lucky enough to have fixed in 12 to 18 months ago, they're probably not feeling the stress at this point of time. But for Aussies who are sitting on those variable interest rates, it's a very different story. We've gone from a cash rate of 0.1% all the way up to 3.35% in February 2023. And this is making a real difference to those Aussies who have their own home or have investment properties and are looking to manage their finances, manage their repayments, and build their wealth. There's a real concern about negative equity situations. All negative equity is when your home loan is worth more than the value of your property. People who put down 5 or 10% deposits are at a much higher risk of this occurring with property price declines. Now, there is an expectation in the Australian market at this point in time that there will be several more rate rises this year, and then the RBA will reverse that and start bringing interest rates down again. But some areas will be more affected than others in terms of price declines, and some areas have remained steady, and even some spots have seen more demand with limited supply. It just depends on the suburb and the street at this point in time. But generally, across the market, we have seen the market soften Australia-wide, and that's where those struggling with their repayments may be forced to sell in the next 12 months. The RBA is really just trying to get a handle on inflation. Yes, they're looking at the property market and they're looking at the repayments that the everyday Aussie is going to be making on their home loan, but they're most worried about bringing down spending in Australia's economy to slow the markets, and the RBA is going to be looking to target around that 2 to 4% for inflation rather than that 5% plus in terms of inflation that we've seen in the last 12 months. So let's have a look at the average mortgage here in Australia. The latest lending indicators from the Australian Bureau of Statistics show that the average mortgage size for owner-occupied dwellings was $601,797 in November 2022. So what does this mean for the average Aussie based on the cash rate and based on variable interest rates? Let's mock up a big table that I can show you the numbers from 0.1% cash rate all the way up to a 5% cash rate. So if the average mortgage size is $601,797, and only 12 to 18 months ago, you could get an interest rate of 1.99% when essentially the cash rate was 0. What we're seeing is the RBA now has the cash rate at 3.35%, which is sitting around row 17 on this heat map. And generally, most for the everyday Aussie and most people who are owner occupiers, the buffer that banks put on top of that is about 2% more in terms of actual repayments for a variable home loan. So if you were on around 3.25 to 3.35, your interest rate would sit around 5.25 to 5.35%, which would be about $607 a week or $32,000 a year in terms of interest-only repayments. The quick maths on that is that repayment at around 3.25 or 3.35% is 2.65 times higher than a interest rate at the 2% mark. So based on the cash rate and based on the movements that the RBA's made, you're paying 2.6 times more in terms of your weekly repayment and your annual in terms of the expense on your mortgage. So what's going to happen if rates continue to rise and we get closer to the 4% mark? So moving down, you can see 3.5, 3.75, 4%. Every 0.25% increase that the RBA makes and that transfers over into variable interest rates equates to around $28 a week or around $100 a month or $1,500 per year. So you can see if we have another 3 or 4 rate rises that the average Aussie will need to pay around $300 to $400 extra on their home loan a month based on just the interest-only repayments. Now, for those who have kept liquidity in their portfolio, liquidity in their bank accounts, and not over-leveraged themselves, these interest rate rises have been more manageable. People who don't have the cash reserves and have over-leveraged themselves and gone with that 5 or 10% deposit will be in a much more difficult position, especially if they've bought at the peak of the market and if they've overpaid for property. It's much more difficult for owner-occupiers in these situations because they need to foot the bill for the higher interest rates. But investors are seeing an uptick in in rents, especially here in Southeast Queensland. What we've seen on the ground is rents increasing around $30, $50, even $100, $120 a week in the last 6 to 12 months, or especially in the last 6 months. Rents have gone through the roof. And so even though investors might have higher variable interest rates, it's being somewhat offset by higher rental price increases. So what does the playbook now look like for the rest of 2023? I think my expectation is there will be 3 or 4 rate rises through the rest of 2023, and the market is going to react with a slowdown because as things become more expensive, people have less capacity to pay a higher price for property. Now, to some people, this could seem like a great opportunity, and for other people, this could put them on the defensive and make them go very reserved in their approach to progressing. For Emily and I, it's generally the more aggressive approach. We tend to always see opportunities in the markets, whether there's boom or whether there's bust periods, whether interest rates have remained steady or the interest rates have risen. When we first got into the property market, the cash rate was sitting around that 2.5%. And so we have been through these interest rate environments before, and we also hold significant cash reserves to give ourselves a lot of breathing room and to let us access opportunities in the market, whether it's investing in future projects, whether it's investing in the business, investing in our own home. We have the option because we've kept ourselves somewhat liquid throughout this process. Now, I get asked almost every day of the week, Luke, is now the time to buy? 2023, the rates are going up. The market has softened a little bit at this point in time. Maybe it's time to jump in. Now, for me, what you need to do is align your strategy and your finances. So if your strategy says you need to buy this year and it's time for you to take action and you've got the finances in place to do so, that's where I would go out and make that next move. If you don't have your finances in order and you haven't got a strategy or an approach to building your wealth and creating that long-term vision or that long-term goal and reaching that goal, then how can you actually take action in 2023? We're seeing great opportunities here in Southeast Queensland where some sellers are coming down in terms of their price expectations and meeting the market. There certainly are the sellers out there who are living 6 months ago and, at the boom in 2022 and aren't being realistic with their sale prices. What I've generally seen is those higher priced properties have come off a fair bit because they are at the extreme end and more luxury. Properties in the middle band between say 600K and 1.2 million have remained fairly steady because that's where the bulk of the demand lies. And the lower priced properties which were in subpar locations or had issues like they're on main roads or thoroughfares or too close to industrial areas, those types of properties which didn't tick the right boxes have also come off a fair bit in terms of price point. So the number of rate rises that we're going to see in 2023 remains to be seen, but the most important thing is to keep yourself liquid and take action that's aligned with your goals. If you're not interested in taking a short-term perspective and you want to look at a long-term perspective in terms of buying in the Southeast Queensland market, I've made a video breaking down 5 major projects here in Brisbane that will change the Brisbane landscape in the next 10 years. So click this video over here to watch that. Thanks for sticking around. I'll see you in the next one. Peace.